On Small Cap Power, we're pleased to welcome Frank Holmes, CEO and Chief Investment Officer, back onto the show. Thank you so much for being here, Frank.
Hey, it's great to be with you.
Always. Thank you so much. And the last time you were here, we discussed your new ETF, which launched on the New York Stock Exchange at that time in June. How's its performance been so far?
Well, Go Gold has done exactly what it was supposed to do. It's smart beta, and it looks at the value factors per share. It has both a fundamental analysis and a quant approach to picking a basket of stocks, and is dominated with the three major royalty companies, Franco-Nevada, Silver Wheaton, and Royal Gold, which rebalance each quarter. In fact, the whole mechanism rebalances each quarter. And it's outperformed the GDXJ, and it's only early, but the index versus their index, yeah, it's going back over 10 years. It's far, far better because the GDXJ only cares about a basket of gold stocks. And it's been so disruptive to the Canadian markets. They brought in $5 billion and over a year, and then they blew out $3 billion because they ran into regulatory headaches of owning too many shares of companies as a percentage of the market cap. And $3 billion in 6 weeks is still a lot of mining companies, great junior mining companies in Canada, are bruised but walking.
Now, the GDXJ did have a rebalancing in hopes to correct the mess that they created. Do you think that they're on path for a better outlook?
No.
No, why so?
Because they just are consumed with market cap and liquidity. The structure, the inherent structure, it shows where the ETF can actually grow faster than the public companies. And that's a classic example of just growth for the sake of growth of market cap. Doesn't pick good stocks.
Right.
And so what we're looking at are those smart factors based on tremendous 8,000 hours of regressional research that are better ways to pick gold stocks. It's less names, and it's those companies that really respect deals that are accretive on a revenue per share, cash flow per share, price to book value, that these factors are very significant. Well, when looking at gold, and the same thing when I've looked at the ETF space, is I prefer smart beta. When we look at gold, and gold is one of those key components because since 2001, gold has far outperformed the S&P 500. And there's always so many naysayers. And I've always advocated a 10% weighting and rebalance once a year. But people are so quick to forget the long-term performance of gold.
Right.
And it's been fantastic, and I believe it will continue so. Gold is also the love trade. And as you know, in India, it's 40% of the world's population. But then when we add Japan and South Korea and Vietnam and Thailand and that whole region, you're talking about where gold is given for love.
Right.
And it's also the ultimate of safety if something happens with my family to get out of a country like Vietnam.
Yes.
When they went through with the whole drama of the boat people. So I think there's two components. And I think the love trade is going to become more significant over time.
Okay, and that's funny that you mentioned because culturally we're approaching some holidays. So you say that historically this is a time to invest in gold.
It is, and it always starts in June, or starts really with the season of Ramadan. And then you see gold get a bottom, and then you see it start to rally. We're going to go into a series of wedding seasons to the ultimate in India. We're going to have the season of lights, which is like New Year's party in India.
Big thing, yes.
And we're going to see, and also India's now become a gold buyer again. There was this whole drama last year of currency controls and canceling of old currency for a new currency, etc. Well, now all of a sudden we're seeing, once again, great consumption coming out of India for gold. So, and then we're going to have Chinese New Year is usually after Christmas is the ultimate for gold.
It's a very big time for the Chinese to be investing in gold at that time.
Absolutely.
Absolutely.
And I think that's a normal cycle. And when gold hit 1900, it was when the love trade was coinciding with negative real interest rates in America, which is the fear trade, where the government was saying, buy my 10-year government bond, but you lose 3% a year for 10 years. Anytime that happens. So right now it's positive. Okay. There's a positive rate of return. But back then it was minus 3% a year. So currency falls, gold rallies.
A lot of people say no to, they're turned off by gold. Why do you think that is?
Because of just the predominant thought leaders. It's amazing to me that the Federal Reserve keeps gold as a foreign currency, not paper money. but most of Wall Street is negative on gold. And I think over time it's going to change, and why what were the price makers was London and then New York, and now it's Shanghai. Now the rest of the world is going to become a price taker. And the only time you see they disrupt the price of gold is when China's on a holiday and the liquidity is low, and they use futures market where it's leveraged between 10 and 20 times to 1 to bang down the price of gold to be disruptive. And so there's this old thesis on gold manipulation. Well, just think that they do manipulate bonds. They change but they're public with it, but they're going to do the 30-year, 10-year, 5-year. You're seeing in the EU how they come and manipulate the overall bond yield, et cetera, with negative real interest rates. So the whole thesis on gold that they could be manipulated, they do with bonds, and it's much smaller. But I'm a big believer that you should have it, because there will always be imbalances in any country between its monetary and fiscal policy. And whenever that happens, gold starts to perform in that country's currency, and it's a form of insurance.
Now, I want to talk about something that is potentially in your radar. It's something we hear about more and more, Bitcoin. So is it special to you? Why or why not?
Oh, I love this space because it's just intellectually fascinating, because money's all about trust. And paper value, if the government has good policies and there's trust that you can take this paper and it can keep its portability to go buy other products and services, unless you're in Venezuela or you're Zimbabwe, where governments destroy the value of the paper money. Bitcoin, Ethereum, it's digital trust. And that's what's remarkable about it, and it's capped how many coins can go out. So therefore, the negative real interest rates and the paper printing of other currencies around the world is really, the thesis is that it's not so much Bitcoin's going up, it's other countries' currencies are depreciating. And I think the idea of digital trust, non-centralized, is really fascinating, and it's going to, because it's based on what they call another form of internet. It's another evolution of the internet, and it's blockchain technology. The hard part is, you as a retail investor, it's hard where I can't go buy something. And I think something will be coming out very soon that will allow investors to be able to participate safely on mint coins, not the Silk Road coins or any of these other things, but basically a brand new way of buying Bitcoins that'll be listed on exchange, the way the GLD came out for bullion.
Right. Now, lastly, I want to talk about what investors always want to know. What's on your mind? What are you investing in that we haven't talked about so far during this interview?
Everyone, and if you look in Canada in particular, is income. It's income, it's income, it's income. So some of the greatest ETFs launched here are monthly paying preferred dividends. Who would ever think of that? I mean, talk about boring. But it's not boring for investors, because you're seeing all of a sudden a new mechanism for companies to finance will be issuing preferred stock, and you're talking about billions of dollars have gone into this space in the past 18 months in Canada. So I think that dividends is significant, and that's why when it comes to gold space, I've always liked Grand Columbia gold notes listed on the Toronto Stock Exchange, because I get a monthly dividend. It's almost an 8% coupon, and it pays every month. The company's got big free cash flow, and they're now redeeming those gold notes at par. So I think that for me as a gold investor, that's where we have $20 million invested.
Right. Well, Frank, thank you so much for sharing your insights today with us.